Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja. Well, we saw mild profit booking yesterday after Nifty stunning 4% rally to a record high so far in this expiry. But where are the markets headed going forward and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian markets are seen sideways to flat on Wednesday as global equities await the outcome of a crucial meeting of the US Federal Reserve tonight on the direction of interest rates. Mild profit booking is likely to continue as record levels on the Nifty invite bears to try their luck. Cash counters are likely to remain in heavy demand as punters go long on select public sector enterprises where aggressive price patterns are seen. Extreme caution is advised. Very good morning, ladies and gentlemen. It's a lovely Wednesday morning, and to discuss the market strategy and the outlook going forward, let's do one thing. Let's welcome our guest on the show today. So today we have with us Mr. Avinash Gorakhshakar, who is the head of research at Profit Mart Securities. Good morning, Avinash. Always good to have you on BTTV. So let's start with the market outlook first. I mean, ahead of the US Fed policy decision, there was mild profit booking that we saw yesterday. And Nifty dropped almost 90 points to 20,906 odd level. Nifty Bank was, that ended flat at 47,097 odd levels. But I want to understand from you that what should be the strategy for today and where do you see markets going forward?
Yeah, good morning, Tanya. I think I sense the markets are going to open on a softer note today. But I think the key event to watch out today would be obviously the Fed policy statement, which comes out in the evening today. I think broad expectations are that Mr. Powell will maintain a status quo. But I think his commentary on inflation, his commentary on the economic outlook is going to be very important. So I think, you'll get a lot of cues from the US markets today when they open later part of the evening. But I think some interesting macro data which has come in yesterday, like CPI data has been much better than expectations. Industrial growth for us has been much higher than what the street expected. And I think most importantly, I think there have been some few brokerage reports saying that India could possibly see GDP growth rates of at least 7 to 8%. So I think these are encouraging kind of statements. My sense is that liquidity in the market continues to be very good. Yesterday also we saw a good amount of buying from the FIs. So I think it's going to be more of stock specific activity. Broader markets are going to remain in a very small range. And I think clearly, I think, the heavyweights, that is the large caps, may see a little bit of action today. The Axis Bank deal, the block deal has already got completed. So I think you could see a lot of action in the, private banking counter, something like an ICICI, an Axis Bank, IndusInd Bank. And most importantly, I think with industrial growth numbers picking up, a lot of activity in the capital goods space and the interest sensitive space could possibly see some traction today. But I think overall it's going to be stock specific. So I think we'll have to wait for further commentary from the US Fed meeting, which I think could be the near-term trigger for the markets. But net, I think it's a buy on decline market. We are looking at better numbers, from corporates, better kind of, headline inflation numbers, even for the Indian context. And I think that is definitely going to be a big positive sentimental booster for the markets going ahead.
Okay, absolutely. Got that. It's a buy on decline markets. And let's do one thing. I would request my PCR team to pull up the pre-open rates for our viewers, Nifty and Bank Nifty both, and we'll discuss the outlook going forward as well. And so Nifty 50 in the green on your screens, a mild uptick there, as you can see, 20,929 is the level. 23 points higher, soft mild uptick there on Nifty 50 and Nifty Bank also. If you see, if we can pull up that as well for you, that ended at 47,097 odd level. That is up 93 points in the pre-open session. 47,190 is the level where we are at. Coming to you, Avinash, for your picks as well, because you said that it's a stock specific action that we are going to see. So any stocks that you would like to recommend to our viewers?
Yeah, I think from the large cap space, we continue to like Cummins. See, Cummins has done remarkably well in the first 6 months, and the commentary also from the management has been very encouraging. So I think here probably even at the current levels or maybe on a dip, I think Cummins definitely looks quite attractive. With a better industrial growth, more corporate capex coming in, plus government focusing on a lot of infrastructure, I think we could see fair value levels of around 23, 23 and a half, so 2350. So I think here, I think a quality business available at a reasonable fair valuation. So I think Cummins could be a good bet. And obviously, with better industrial growth, you will also see the commercial vehicle players, especially Tata Motors, also picking up quite well in the domestic market. So Tata Motors and Cummins, I think these could be two good bets in the current market. I think which are safer in the market, considering that there's a lot of run up expected in both these counters. So Tata Motors around 770, 775 is a fair value over the next, say, 12 to 15 months.
Okay, absolutely. Cummins and Tata Motors, these are the out on that. And let's do one thing. Let's pull up these insurers like HDFC Life, SBI Life. So Avinash, these two stocks were among the top gainers. If we talk about yesterday's trading session, and experts are saying that because of low float and part rotation out of lending stocks, after the, of course, RBI's decision to increase the risk weightage on secured loans, this is something that is working for these life insurers, and we have seen a stellar rally coming in of late in these stocks like SBI Life, HDFC Life, GIC. So your thoughts on these insurers and any stocks that are on your radar?
So I think, see, the life insurance space is definitely looking strong and attractive, considering that typically the second half is considered to be a much better period for business for them. In fact, the Jan to March quarter is supposed to be the peak quarter. But I think what has happened is that on ground, business conditions have become extremely favorable. So I think, clearly you could see a good rise in premiums, collected by these companies. Plus, obviously they have large treasuries, which would also help them add to their, other income. But my sense is that overall the insurance market seems to be picking up, and I think with a very low penetration ratio in India, the headroom for growth is quite significant. So I think you could look at stocks like SDFC Life or typically an SBI Life. I think these are long-term bets over the next, say, 12 to 18 months, and I think investors can definitely include them in their portfolios if they expect a reasonable risk reward going forward.
Okay, absolutely. And market has opened. So let's pull up Nifty and Nifty Bank on your screens. So it's a clearly markets are flat as we speak. 20,896 level there on Nifty 50 and Nifty Bank also in the red. 38 points lower, 47,059 odd level. So we were expecting mild profit booking, of course, after the stellar run that we have seen so far in the markets. People are pulling out their money and they are going for some profit booking at this point in time, as we can clearly see. Mid cap index, if we could pull up, that is in the red, that is in the green as we speak. So broader markets continue to outperform. Irida, I think we should pull up this stock as well. The stock was, in focus yesterday, 20% upper circuit for the second straight day. And okay, 100 is the level where we are at. Flat trading on a flattish note, and then we should pull up some other stocks as well. Let's see how the Bank of India is doing. So Bank of India, if we see clearly 5% downtick there, Suntick Reality, these are some of the biggest losers for you. JNK Bank, and then BPCL, and then of course some other stocks as well from the mid cap and small cap space. So these are some of the stocks. Okay, BPCL is in the green. So BPCL, if you see, that was among the top losers from from yesterday's trading session. Let's see how these life insurers are doing. Let's pull up HDFC Life, SBI Life, uh, and let's see if the momentum continues in these particular counters as well. Okay, so we are seeing profit booking in these counters. HDFC Life down 1% and SBI Life are also trading 0.32% lower at 1476. PI Industries, that was the stock that crashed yesterday. And if we see today's trading price, PI Industries is in the green as we speak. If you could pull up that stock for our viewers. So I want to discuss PI Industries with you, Avinash, actually, because the stock crashed in yesterday's trading session, and that was because of the news that Rainbow Agro's announcement of entering the prioxasulfane market with a substantial 2,000-ton project approval. Now, this news is something which is negative for PI Industries because prioxasulfane contributes almost 50% of its revenue. So how do you look at this news, and where is the stock headed according to you going forward?
I think, Tanya, this news is definitely negative, and I think the stock has been trading at fairly expensive and premium valuations at the current price. So I think any negative news flow obviously gets impacted immediately on the negative side, for the stock. So my sense is that this company has got the credentials of being a very quality player in this field for a very long time. So at least for the near term, the market would believe that they would be able to ward off competition quite comfortably. Although obviously as competition increases, that would obviously mean a little more pressure on their margins. But I think it would be at least 2 to 3 quarters away. So we'll have to wait for further clarity from the management as to what is the strategy of the company to fight out competition, how they want to position themselves in the domestic market. So I think net, I think investors who already have positions can hold on. Fresh buying, I would believe, is better that we wait for the third quarter numbers and get some clarity from the management post the Q3 numbers.
Okay, and what about Irida, Avinash? Because I think we should pull up this stock as well. This stock was up 20% in yesterday's trading session for the second straight day, and it's up over 100% in just 9 sessions. Clearly, a stellar run from the listing price as well. So, where do you see this stock heading as we move ahead?
So I think, see, Irida has given very stellar returns ever since it's got listed. The IPO was at 32 rupees, and the stock has already multiplied, almost 3 times. So my sense is that some amount of profit booking investors need to take a call, because clearly what is happening is markets are looking at renewable and green energy in a very positive way. Almost everything in the green energy space and the renewable energy space is flying. So my sense is that this kind of sporadic buying will continue for some time, but at some point of time there could be a lot of profit booking also, because clearly the stock has become expensive. So my sense is that fresh buying should be avoided. I mean, investors who already hold it can obviously take out some part money and obviously hold on to the rest, because clearly in the renewable energy space, IRDA is a very large financing player, but it is still smaller as compared to PFC and REC, where the market is giving some sort of comparison. So I think it's better to hold on, but no fresh buying would be advisable at current levels.
Okay, absolutely got that. So that's the verdict coming in on Erida. But what about Paytm, Avinash? Because Paytm has been under pressure lately, and on what Paytm has indicated on the back of the directive from the Reserve Bank of India. Do you think it is a good time to buy this selling into Paytm, or one should wait?
No, I think the stock definitely, Tanya, has come down to very attractive levels. In fact, the stock has corrected significantly to this news flow. And my sense is that unless somebody has got a 18-month or 24-month kind of time horizon, this could be a good time to nimble into the stock, because clearly 1 or 2 quarters may be challenging, but but the company has a very large retail base. obviously they would be making up some contribution from the other business segments. But definitely in the near term, markets are looking at a tough third quarter from the company, and that is why the stock has been hammered very badly. But around 600 odd levels, definitely it's a good long-term buy if somebody has a 18 to 24-month time horizon. Clearly, from the fintech space, I would believe that this is a good time to accumulate, but provided the investor is slightly having a medium to long-term objective.
Okay, absolutely got that. And I think PCR, we should pull up KPIT Tech. That's the top gainer from the mid cap space today. Now, the stock has been under consolidation mode, and then we are seeing a fresh buying today, 3% uptick there. 1477 is the level where we are at. And of course, mid cap IT stocks have outperformed large cap IT as well. Coming to you, Avinash, for a quick word on KPIT Tech, and of course, your thoughts on the entire mid cap IT space.
No, I think compared to the large cap IT, mid cap IT continues to do well. And I think apart from KPIT, which has got a very productive and a very differentiated kind of product portfolio, the company also gave a very positive guidance, which in itself is a very positive thing. And the markets actually gave a good kind of boosting response to this guidance. My sense is that across the mid cap space, something like a Birla Soft or typically a Persistent, typically a Mastech or even KPIT. I mean, these are companies which are showing much stronger growth than the large cap IT companies. And I think this is largely because, cost management wise, realization wise, they've done a much better job. So I would believe that, investors who want to put money here should realize that there could be some headwinds at least for the next 1 or 2 quarters. But post FY24, once March, April gets over, I think you could see a good bounce back because with the US economy now recovering, my sense is that next year, IT budgets could be scaled up quite significantly. And these smaller companies, which have a smaller base, could definitely see a decent risk reward even from the current level.
Okay, absolutely. And one stock which is in focus is Indian Bank as well. If we can pull up that stock for our viewers. So the bank has launched its QIP issue, and the floor price has been fixed at 414 per share. So if we see the price action today, it is the top gainer from the PSU space, and 440 is the level where we are at. Your thoughts on Indian Bank, Avinash? What would you do with Indian Bank at these levels?
So I think, see, within the entire PSU bank space, from the medium-sized PSU banks, I think Indian Bank has done a reasonably good job in terms of asset quality, in terms of disbursements. And I think, recently Bank of India also made a QIP. The response was quite, encouraging. So I think, most of the FIs, most of the funds are quite happy and quite, forthcoming on the fact that the PSU banking space is undervalued. And I think looking at the kind of strong trade growth, corporate capex, picking up very well, plus a strong industrial growth, I think you're going to see a lot of money being, channelized through banks. So I think definitely investors can look at even buying the stock at the current level if they have a 12 to 15-month horizon, because our sense is that the PSU banking space still looks undervalued. And considering the kind of GDP growth numbers the RBI has given out, plus the corporate capex, kind of environment, definitely PSU Bank should do well. So I think Indian Bank can definitely be looked upon as a long-term kind of portfolio bet.
Okay, and let's discuss some of the other buzzing stocks as well. So NTPC is the top gainer from the Nifty pack, Avinash. 288 is the level where we are at. Your thoughts on NTPC? Where is the stock headed according to you for, let's say, 6 months to 12 months?
I think, see, power generation, Tanya, has been a very, a strong theme, and I think this is not going to end soon because supply constraints are still, evident in the sector, and power generation is getting lapped up by users both from the residential as well as from the industrial segment. So, with a strong industrial growth, I think it's very clear that the next 6 to 12 months, hopefully this rate continues of IIP, I think you're going to see a lot of traction for most of the power generating companies. And NTPC is also contemplating a big significant expansion. So, that would also add to its revenue and bottom line. So I think even at the current levels, if somebody wants to take a position, my sense is that over the next, say, 12, 15 months, we could look at levels of 320, 330. So I think comfortably, I think this can give a decent risk reward, for patient investors who can look at this stock, because typically this stock is a slow mover. It doesn't move very fast. But definitely, I think looking at the numbers and fundamentals, I think it can be a buy on decline.
Buy on decline, that's the strategy. But any other stocks? I mean, any other power stocks that are on your radar?
Yeah, I think my guess is most of the power stocks have gone up, but I think ancillary companies, like KEC International, typically, transformer companies, even companies which are into power and cables, typically because now what has happened is most of the power generating company stocks have moved up. I think a classic example has been Tata Power, which has shown a very decent upside. But I think within the power and cable space, there are many companies like Polycab, a small company like Paramount, Cables, which is, also, within the mid cap space. So we have been meeting most of these companies, and the kind of signals we are getting is that power generating, companies are generating more demand, industrial growth, corporate capex. All this is definitely getting reflected in, the numbers for these companies. So I think you could expect a very strong second half for most of these cable companies also. So I think you could keep a watch out here where the risk reward, could be better as compared to the power generating companies, which have already moved up quite significantly.
Okay, absolutely. And let's do one thing. Let's pull up HPCL as well. The stock is among the top gainers from the mid-cap space today. And we have seen actually oil marketing companies performing well lately. But coming to you, Avinash, for your thoughts on HPCL, 366 is the level where we are at, 2.5% uptick there in today's trading session. What would you do, at these levels?
I think, see, most of these oil marketing companies, including HPCL, IOC, BPCL, have moved up largely because crude prices have remained stagnant and on the decline. See, yesterday also, I believe crude was down by about 3 to 4%. So, this is one basic driving factor for most of these oil marketing companies, because typically when oil prices continue to remain low, these companies generate a much better gross refining margins. So my sense is that, over the next 1 or 2 quarters, hopefully crude prices remain soft. You could see a significant amount of re-rating here. But the caveat here is, there have been some news reports that the government may put in some price restrictions on petrol prices, because now most of these companies have recovered most of their losses. And I think there are expectations that there could be a price cut, which government would tell these companies, considering that, obviously the customer also wants to be benefited. So I think if this eventuality happens, then I think there could be a little bit of profit booking. But still, I think the profitability levels would be significantly better than last year.
Okay, absolutely. Before we let you go, Avinash, since you said that it's a stock specific action that we are going to see in the markets, so any stocks that you would like to recommend from the mid cap and small cap space, because this space has outperformed, and how? So any topics that you would like to share?
I think typically a small mid-cap stock which we recently met, Tanya, was a company called Megastar Foods Limited. Now, this is a very interesting company. Not many people know that this company basically makes specialized wheat flour, for MNC customers. A company like ITC, a company like, Domino's, Pizza Hut actually source their entire, 100% requirements for this company. And basically, this is specialized wheat flour which is customized and made up to their requirements. In fact, recently the company made a preferential offer of roughly about 42 crores, and many marquee investors like the Polycab family office, Garware family office, Prabhudas Liyadar family office has actually invested in this company. So our sense is that, the capacity is going to be tripled by next year, and hopefully we could see very strong numbers for the next 2 years. Like this year, we are expecting an earnings around 15, 16 rupees. And next year, this could be possibly around 24 to 25 rupees. So this is a very interesting, mid-cap stock, where I believe that the product quality and the product differentiation is very much strong, and where the earnings numbers are going to get remarkably better over the next couple of years. So we are looking at a target price of 450 here. I think any dip or decline should be used as an opportunity.
Okay, absolutely. So Megastar Foods, 450 is the target. Let's see how the action pans out. But on that wonderful note, thank you so much, Avinash, for taking the time out and being with us here on BTTV. So with that, ladies and gentlemen, it's now time for us to wrap up this edition of Market Today. And markets actually continue to remain flat, but all eyes are now on US Fed policy outcomes. So let's see how the action pans out going forward. But for that, you don't have to go anywhere. You just have to stay tuned to BTTV. Lots more coming up for you. So stay tuned, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.